Welcome to Advanced Course Part 4, Exhaustion and Level Strength Relativity. Alright, if you're enjoying the content so far and haven't subscribed, go ahead and do so. If you want to support what I do and donate, you can find those details in the video description below. And if you haven't checked out the Twitter and TradingView account, I would suggest you do so, as I post up my content release schedule, things like charts, day-to-day interactions, and so forth there. Alright, without further ado, welcome to Advanced Course Part 4. Okay, I want to start this lesson by dissecting some of the myths out there. There has been, over the course of the last 10, 20 years, all these different theories that have come out around regarding how many times does a level need to be touched to be broken? Does it do this? Does it do that? Is it stronger for these reasons? Is it weaker for those reasons? It's in bold here you can see I've marked out supply and demand zones. Really what's taught by the greats is that supply and demand zones, Dow theory states that we have supply zones and we have demand zones, right? Which is really what it is in the very core and the base ideology behind levels and how many times they need to be touched to be broken and this and that is really just ends up being supply and demand zones. But people have kind of done this thing where they've abused that idea and manipulated it and massaged it into their own versions of trying to create some kind of strategy. In books I've seen it called it's kissing the levels, or it's stronger the more times it's been touched, or it's weaker the more times that have been touched, or it's doing what's called level shaking, which is another term from another famous book, which is talking about untested levels, which is also the same thing as the two-touch method, the three-touch method, the five, the seven-touch method, because there's the 2, 3, 5, 7-touch method and what each one means, and they all have a specific thing they do. And parabolic setups is another one that I've seen in books, where you have parabolic tests, they call them, or first entry zone or last entry zone, short touch, long touch, broken and unbroken levels, bear traps, bull traps, and all the other abuse of terms that have been created over the course of the last 20 years, and the way people have tried to take this idea and this psychology and try to manipulate it into something that it's not. And really, the reason why none of these work is a very simple thing. And I realized this after years and years and years of taking all these different theories and reverse engineering them to see, okay, what's making it happen? And really, it comes down to events that happen in the markets. And events cause different events to happen. And those events are the effect of the events from the past, which affect the events in the future. So really, it was just an understanding of the events and how they come into it. So for those reasons, I call this exhaustion and level strength relativity. You can call it whatever you want, as long as you follow the underlying psychology, because really the name doesn't have, there is no title for what this is, right? I call it level strength relativity because that's what makes sense to me, because a level is strong relative to the events that have happened. It doesn't have a set strength that's forever in stone. It is, even if it's a monthly level or a yearly level, it doesn't have a level that's set in stone forever. It changes as events happen in the market. So for me, I call it level strength relativity. And exhaustion. Exhaustion is the amount of times a level is touched and how it exhausts and at what rate. And you can call it to the moon and back levels, or you can call it the kitty cat deluxe levels, or whatever works for you, as long as you follow the psychology behind why these things happen. The terms don't matter. And that's why all this stuff that you see, like kissing levels, level shaking, whatever, if you understand the psychology behind it and why the events are created and what happens, then you'll know that there is no need for labels. But for me, I call it exhaustion and level strength relativity, because those are the two terms over the years that I had found myself using every time I explained it to either my students in person, or to somebody who didn't quite understand. I constantly found myself explaining it and then saying it's exhaustion, and then that was that makes sense. It's exhausting its resource, and it's relative. Its level is relative to what's happened in the past. So the strength of level is relative to the events that happened, and those are kind of just the marquees that people kind of grabbed onto. So I've just levitated towards using exhaustion and level strength relativity as the way I explain it. So that's kind of, I wanted to start this lesson out by just dissecting the myth and just showing you guys that, call it whatever you want. We're just going into psychology, and the psychology explains why things happen. So What is what is exhaustion and what is level strength relativity? I'd love to edit that out, but I don't edit any of my videos. I do them all in one take, so it's just a one shot, one go. So we won't be editing that out, but that's okay. We'll keep it in there anyways. A little blip for a highlight reel. Oh, we're already in replay mode. Okay, good. So I'm using Litecoin today just for no other reason other than it was just kind of cool. I just wanted to chart Litecoin. So I just want to start here in the move and kind of go through exhaustion first. And exhaustion will lead into level strength relativity. So then we can talk about the relationship behind them and the psychology behind exhaustion and, you know, what happens here in a move. So this lesson is going to be deep in theory, just due to the nature of how exhaustion works and how level strength relativity works. This is going to be very deep in theory. So I'm going to mark out levels from where we are in the course right now. So how far we've gotten, I'm going to mark out those levels. So if you haven't seen the advanced course fully yet, go back and watch it. And if you've seen the advanced course but haven't seen the beginner's course, go watch the beginner's course, because you won't be able to follow this lesson if you don't fully understand the beginner's course, and the beginner's course allows you to fully understand the advanced course, and the advanced course leads up into this lesson for a specific reason, because this is a very important concept to know. But before we got into this concept, there had to be a very specific set of criteria you guys had to have first, right? So, all right, let's just get on to this thing, and we're gonna go and look at this thing. So what is exhaustion? Exhaustion, and I guess this will be the best spot to start here. You know, if this was happening right now in this move, what would I do? I would mark the start of the downtrend in this move, and let's put our fancy little magnet tool on, right? And we got our magnet tool there. So this is the start of a downtrend, so that's a level there, right? And what are we gonna do? We're gonna come up and test that level, and then the start of this uptrend would have been, where's my tool here? Would have been right here. That's the start of the uptrend. So we know when we lose that uptrend, you know, that's the start of the downtrend, that's the start of that uptrend. And I'm not going to get into the fractal relativity of this. You know, in all reality, it could quite be here. It could be, this could be a micro zone, and this is the actual uptrend. Not important for right now, but just to mark the move out for clarity and to keep this thing cohesive. So that's how I would have marked that level out. Now that level is not important to me anymore. I would now go here and I would create the end of that downtrend, right? So that's kind of the downtrend that we talked about in other videos. You know, you've got this area right here that ends up being like this, and this would have been the downtrend start somewhere on a micro level, maybe on the hour or the 15-minute. You know, that would have been it. So that would have been the downtrend and the identifying of the downtrend. So now let's talk about exhaustion for a second. This point would have been created in the past somewhere, okay? So good old magnet tool, one we love. This would have been created in the past somewhere, okay? So what is exhaustion? Exhaustion is the amount of support a level gets, and there's a common misconception that the more times a level is touched, the stronger it becomes. That is actually false, and it is the opposite. The more times a level is touched, the weaker it becomes, and there's a reason for that. So when people are buying, and we're going to go through that, when people are buying this level, it has an exhaustion rate of how many times it can get bought and sold, right? And it kind of falls into the same theory that you guys see over and over. And look, it happens right here. This is what I'm going to talk about: first touch rejection. First touch rejection, whether it happens 80, 85, 90, 95% of the time, I constantly talk about how you create a level, right, which is an event. So I'm going to use that term a lot in this video, as an event, because I want you guys to start seeing this as events that get created, because this stuff is relative to what happens in the market in that moment. We don't have a static line, right? Say we had a monthly level, and for some, and I don't know if this is, it's probably not true. The likeliness of this being true is very slim. This is the monthly level. It gets touched. That has an effect. That is an event that gets created that has an effect on the future of this level, and the event that was caused in the current, in the moment, was affected from something of the past. So these events that happen are always changing what is happening in the market. So it's a very important concept to understand that levels evolve and the entire market evolves, and nothing stays static in markets. It is all events that occur, that happen for reasons in the past that affect reasons in the future differently. So it is very important to know. So if this was a monthly level, maybe this was first touch on a monthly level. And we know for whatever reason that this is where rejection happened. That was created by a past event. So going back and talking about first touch, and the reason I brought that up is because there's a thing that happens, which is probably 95% or maybe even more. I'm not sure. I'm sure there's a statistic on it if you did some kind of, program and you had a bot run an algorithm over thousands of stocks or years and years of periods of time. But really what happens is it's exhaustion. The reason it happens, right? Now that's the important thing to understand here. You have a level that's created. What is the reason behind this whole idea of first touch rejection, right? You have a level that's created, right? Comes down, comes back up and touches this level, right? Going to reject 90% of the time or 95% of the time. Why? Because of exhaustion, right? People know, right? Markets move together, right? If you have 1 million people buying one stock, and this is important to know as well, if you have 1 million people buying one stock at one price, it's going to move up. And if you have 999,000 of those people selling at X price, it's going to move down, right? So that's just the way it is. Markets move together. Volume affects markets, interest affects markets. Not interest as in interest rates, but interest as in human interest. We're interested in this stock for a reason, right? Events get created in markets because of things like volume, because of things like interest, right? So if you kind of dive deeper into the psychology of, we know this is a level, or say institutional investors, because remember, again, this is institutional level trading that I'm teaching. Institutional level traders, they know this is a level. So they are in control of the biggest funds. So they know when it comes back up to first touch that level, it's time to sell. Right? So that's an event. That's an example of an event that was created off the past and kind of ties into that idea of why things get bought and sold every time you have first touch, right? So, and you see it right here in Litecoin, just like you see it in any chart. You chart something out, you pick your level, and if your level is correct, you'll see the first touch rejection, right? And you come down here and you see that down here. So now let's talk about, now we've identified kind of what exhaustion is. Exhaustion is where you have a level that's touched, and if the more times it's touched, the more times it's exhausted. Now let's go further into that a bit, because we've kind of identified where we are in the chart. Now we need to kind of clarify and look at, all right, well, what is exhaustion and why does it work the way it does? So just like here, you see how this price moves down so much? That's because there was a ton of selling pressure right here, just like there's a ton of buying pressure right here. When you have this first touch scenario, you are creating the largest amount of selling pressure that there will ever be in that move. So think about that for a second. This event right here, this first touch, right? This is the largest amount of selling pressure that there will ever be, because you have larger funds, larger people combined with the masses of people selling all at the same level. As long as you identify that level correctly, you have the largest amount of selling right here, just like you will have the largest amount of buying right here in the future. And this would have been created off an event in the past, right? So this, let's go and do this. This would have been, okay, let's say, and actually I guess we should start at this top one up here. Let's say 80% of everybody who is in this trade, 80% of the money, let's say 80% of people, because everybody knows the market is controlled by the larger funds, which is 80% of the money. Let's say 80% of the money sold here, right? And then let's say 80% of the money bought back down here, right? Because this was the same thing as this. This was a level and it was a touch, just like this is a touch off a level that's created in the past, right? So then let's say that 80% also bought back right here, right? 80%, because that's the way the markets work, right? This is classic short and long positions, right? You take a long at the bottom, short at the top. So you short up here to long down here. So you sell up here, and this is 80% and this is 80%. And then immediately, what do you have? Okay, so we have the move happening right now in the current by the daily, and we've started a new downtrend, right? We've started this new downtrend right here, and we're going to mark this as a daily level. So we're going to go red, right? We're going to go red, and we know that the most amount of times that this stock will ever be bought is here, just like the most amount of times this will ever have been sold is here, okay? So as we move through this move more, we have another touch there, okay? So now maybe because this is where it gets interesting. People say the more times it's been touched, the stronger it becomes. But you see that constantly in the market, where that is true half the time and not true the other half, because that is actually false. What is happening is now only 60% of people are buying here because the level is being exhausted. Just like when you break a level up or when you break a level down, how do you break a level up? You do this thing, you go boom, 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 right? Or when you break a level down, you go boom, boom, boom. I guess boom, boom, boom might not be the right, I don't know, whatever. You guys know what I mean. Let's use professional terminology. You're gonna touch once, you're gonna touch twice, and then you're gonna break through. Or you're gonna touch once, you're gonna touch twice, and you're gonna break down, right? Because this is what commonly happens. We have this thing where we touch a level, and often the exact move is this, right? We come and we do this. We touch once and then we come right over top, right? Like that's a common thing that happens. That happens all the time. The same thing with on the side down. You have a level that's touched, right? So if we were to actually reverse this chart, and let's say this was the swing low, right, of this move, right? So we have a swing low here, which actually ends up being the start of this uptrend here, which is the level that needs to be held. Good old magnet tool. So this is actually the level that needs to be held, is this red line, because this is the start of this uptrend. We know that once we lose this level here, we're going to go further down. So, and this is a classic example of my boom, boom, boom speech I just gave, as to where what happens is you come down, you test the level once, and then you come down and you break further like that, right? You come down and you establish that first touch rejection, and then you come down and you break the level, right? So the same thing that happens, right? And it's for those exact same reasons of exhaustion, right? So that kind of now starts to explain to you guys level strength relativity as well. So the events that are created, they affect the level in terms of level strength relativity. Because the level is exhausting, the level has a different strength index, or becomes stronger or weaker, have you. Whatever example you want to use, it becomes stronger, it becomes weaker, it becomes a move to set up another move. But the level strength relativity becomes weaker the more times it's touched, not stronger, because every time it's touched, you have a smaller amount of pool of people that are buying it. And that's a very big misconception in the industry. And we'll just kind of go through this move and see where this thing goes. So now, this is where things get a little different, okay? I now mark out my levels differently. So what I do is, and if we go back to our sheet here, and what is exhaustion and what is level strength relativity? What is exhaustion and what is level strength relativity? There we go, nailed it. So now we know what exhaustion and level strength relativity is, and how do we use that, and what is the relationship between exhaustion and level strength relativity, and where does that list, and what are the confines of that? And we kind of talked about the psychology of exhaustion, but we'll continue to dissect that as this thing goes. So now, in my charts, I now change them, and what I do here is, when a level has been tested, I know that this has been created here, this is a downtrend, and this has been tested already. So now I'm doing something very different. I now do this on my charts. I now make them dotted lines, and the reason I do that is because it shows me that a level has been tested in the past. Had this level not been tested, it would not have had this dotted line on my chart. So going forward from this moment, I haven't used in the past dotted lines. This is something I keep off the training material and off my screen for people, just so that you guys don't get confused as, hey, why dotted line, why this, why that? These are things, right? We are evolving our usage of these things. So now I have a tested level, right? And it's already been exhausted once. Okay, now I have a tested level down here, and this has now been exhausted once, okay? And I have an untested level here. So what happens in this move? Well, if you actually were to take it back to here, you have the start of another downtrend, right? So even, right, fractal nature, moves become parabolic to moves that become parabolic to moves. Or, sorry, not parabolic, fractal, that's the correct term. We have a untested level that happens here, right? So we have the start of another downtrend that happens right here. And as this move goes through, it gets tested right there, right? So now this is a tested level, and notice how it doesn't go right over, because it has to test it first before it goes, because you have the same thing on larger time frames. And if you were to now break this down to 15-minute charts and hour charts and 4-hour charts, you're going to see more minute versions of this. You're going to see more buy and sell zones and supply and demand zones, if you will, if you'll want to refer to it as that. You'll see those being exhausted as levels go on, right? So then we have this thing where we then started another downtrend right here after we started this uptrend. We're not going to mark that one out. It's not important. And right there, this now becomes a tested level. So now this level has become tested and it rejects just like it always does, right? We come up, we try to make a test. We come up, we first touch reject just like always. And now before this was untested. So now you can see this level is exhausting. So now we have nothing but exhausted levels in here, right? We have the start of another downtrend, right? This is just the way it works. This goes like this and this becomes a tested level. Right, and right there. So now when you have this happening here, you are not going to have such a strong bounce. Now think about that for a second. Go back to exhaustion. Let's switch our gears back into exhaustion. If 80% of people bought here and 60% of people bought here, that would have held the price up. That would have meant that there is enough demand in this zone right here. There is enough demand in this zone right here that people are going to buy it and not let the price fall through or wick through. Once this level gets exhausted, what happens every time it touches? And this isn't an exact, this isn't a 20% drop off rate every time. This is just what I'm using for this example to keep it easy to follow. Only 40% of people are buying here now. So what does that mean? That means that less people are buying, so it's more likely that the level is going to fail or wick down lower. And look at how far down it goes and before it can come back up. And now we have a new downtrend, right? Now we have a new downtrend that starts here, creates a valley like this that needs to be tested. And once it breaks this, so if we were to mark the start of this downtrend right there, right? If we were to mark this, this needs to be broken before we can test this, right? So now we have another level here. We have another level right here. Now we need the magnet tool. Now he can be our friend again. Oh no. Here, oh, there we go. I said, oh no, like it was the end of the world. So now you guys can see, and we can get rid of this downtrend. That's fine. And I think I should take the magnet tool off just in preparation for what's going to happen in the future. Now we can see that this level has become tested and we would need to touch and reject that just like we did. We need to touch and reject it. And then the same thing's going to happen with this level down here, right? This level is going to need to be bounced off of once again before it can break through, right? And then you see it gets broken through and it comes down, right? Before it can come back up and test this level here. So test this downtrend, and let's bring it back because I double clicked my accident. Remember, this wasn't a tested level right here, so this has not been exhausted yet. Okay, so this needs to be exhausted. It has to have that first touch rejection, right? Right there it happens. This now has become a tested level. Okay, so let's just mark this as a dotted line. Okay, so that has now become a tested level. This is a tested level. This is a tested level. So if we were now to all of a sudden start to close up here, I would fully expect to come and try to break this level again. And it may even just go right through because the move has been set up where it's tested every single downtrend it needed to test in order to get into this area here. And it's already tested this level here right there. So then it can come into this area here to shoot through. And that's starting to become a pretty big, I just kind of did like a basketball coach thing and did the, okay, player X got to go here to, you know, we got to go here to do this and that, and it doesn't matter, but it came really messy, and I'm glad that part of this video is over. Moving on. So now we know that level's been tested, and then it comes back up to test this trend here, and it really needs to break through this and close above it to gain the level, and it doesn't. It actually can't manage to get into this area here, right? And it does right there. Actually, it does right there. It comes and it might have been testing a trend in here. I'm not going to break this down fractally in this video, but this could have been the start of a 4-hour downtrend in here, which I'm assuming it was, and it tested and broke it through. Or it could have been a 12-hour that started here. It doesn't matter. It's not important for this lesson anyways. And I just want to walk through this and see what happens here. You know, and then... Oh, okay, so right there, actually, we do first touch this. So, and then you can see right here, right, this whole thing about 80% here, that same thing is happening here, right? And then this 40% here, you know, that becomes something like 20% over here in this move right here. This becomes 20%, and there's just not enough people to now buy because the interest is gone. You know, you have the bulk of people buying here to make that move to see if it's going to, you know, either reverse or take a scalp position or a short or enter a long. And, you know, longs end up selling their position as this move fails. It comes in, you know, a long position might say, like, I bought here, I'm going to stop out somewhere down here, and this low was reached, so now I'm negative profit. So as soon as I come up and test something in this area, I'm just going to sell for a small profit, and they're not rebuying that level, you see. So, and then the cycle repeats, right? So the cycle repeats right here. Actually, the cycle repeats right here, where we have that 80% of people have bought here, and now this area here, right? So if we take this and just drag it over, that becomes a 60%, right? And this is how moves unfold in the market, right? Let's just keep going in this move. We're not going to get too much into it. And that's the end of the move. So, and then you can see, look at the characteristics of this move right here. This is a complete bounce reject up because it's the new swing low. So you're going to have the most buying happen right here, right? And that's what kind of stops the bleed of the move and moves it up. Secondly, you're going to have 60% of people buy here. But look at how it's not a straight wick down, wick up. You know, you'll notice this right here. This is a straight down, straight wick up. This is a straight down, straight wick up, because it's that 80% of people that are buying that are reversing the volume so heavily. And then on the 60%, right, when less people are buying it, when the level is getting more exhausted, right, when look at the characteristics of the move, it kind of has less of an incline up. Well, look what happens here. This doesn't shoot right up. It kind of has this smaller, more subtle incline up. And then the 40%, look what happens on the 40%. It actually breaks the level and has a tough time even regaining anything in here before it can take a high. And then, like, look at what happens here, because now this is the 40%, right? Now this whole area in here becomes the 40%, right? So if we move this to 40%, we move that to 40%, you can see it does the same thing as this did here, where it has trouble getting up because there's less people buying it. So, oh, we need to put that back. Resetting the chart actually fixed that control paste thing, which is cool. Or the undo and redo move. So we can see here the way that level strength relativity works and how it becomes. And that's odd that we have that. Oh, that's from up here. Okay, no, never mind. It's not odd at all. It's actually exactly where I put it, where it should be. So you can see in this move, and we can take the replayer tool off now. You can see in this move why markets, they evolve in the minute, and there is something called exhaustion, and that was part of my own journey in the years that I took discovering these courses and taking all these books and reading about, you know, just going back to some of these things. And let's go through that list again, because, you know, maybe there's some more clarity. You know, the idea of kissing levels, and kissing levels just basically ends up being when a level is touched and kissed, it bounces off. And that's a theory from one book, and the stronger the level becomes stronger the more times it's been tested, which is actually just completely false. That I've seen that in the industry numerous amount of times. Just like I've also seen the opposite side, where people say the more times it gets touched, like the 2, 3, 5, 7 touch methods, right, which is a very famous strategy. You know, it's a strategy that's used, which I don't, you know, my stance on strategies, they don't work. It doesn't, you don't use strategies because you don't understand the underlying fundamentals of what's really happening. So there's both sides. It becomes stronger and it becomes weaker. Well, which is it? Because both can't be true. It's black and white. One is X, one is O. They can't both win the game, right? You can't have two winners in a game or a tie. That's not what we're talking about here. Well, you can have a tie, but there's a winner in this thing, right? There is exhaustion that happens on a level, right? And parabolic setups become the idea of something having an event from the extreme past and it always holding up its price in the future for the first time. And that's another famous theory called parabolic setups, made by another famous author, where if Bitcoin had one swing low or whatever stock X, whether it be Bitcoin or Apple, if it has a level that's untested, and that's the idea behind parabolic setups, is untested levels. it's going to bounce off that because it's called a parabolic setup, right? And a first entry zone and a last entry zone, which is how many times it needs to touch before you should enter a short or a long, which is another strategy, and a short touch and a long touch, which is close to the same thing, and broken and unbroken levels. And the most famous one of all that you guys will see time after time after time is it's a bear trap or it's a bull trap, which is complete nonsense. There's no such thing as bear traps or bull traps. It's all in the charts, right? So now going into understanding the basics of supply and demand zones, you can see that there's an underlying psychology as to why these things work and don't work, and you almost have to reverse engineer. And that's how I figured this stuff out, is I almost reverse engineered every single form of level identification that I could before I started to see, oh, okay. And, just to kind of finally put one level on this chart so I don't get asked a question, well, where's the new start of the downtrend? It would be right there, right? So this would be the level to be held. This is no longer relevant, right? And that's the thing too that you guys need to realize, is that once this downtrend here, the setup has been done, it's done. It's not a level anymore. So you have, maybe this was a level. I'm just going to assume that it was for the purpose of this video, right? Once this downtrend starts here, and it's not just for the purpose of this video. It's a pretty educated guess to say that this would be the start of a downtrend, maybe on the 12-hour or somewhere else, right? Price would have started down here, it would have came up here, it would have closed something, and then that would have been the actual start of the downtrend. And this was already set up to touch it and break it. So now that this was set up, this level no longer exists, right? And this was touched and broken, and this level no longer exists because it was broken and gained, and this no longer exists, and this no longer exists, right? These don't become 1,000 levels on your chart. This is the events that happen that are the levels that need to be tested, right? And then you would go on through this move and say, here's an untested level, even though price came up over here, right? When this event was created, it's not tested yet, right? It has to be tested, exhausted, and moved up first. Just like you guys saw walking through the move here, you still have to do the same thing over here, right? Just like this would have been an untested downtrend. This right here would have been an untested downtrend, but those were gained in the move. So they're, we don't have to change them to a dotted line to delete them. We can just delete them and, pretend that they're already a dotted line. And then you have another start of a downtrend right here, right? So now and then you have one even more local right here. So, that's the way these things work, is you don't have a million lines that constantly get created and taken away. You have level strength relativity, which is how strong is a level versus how much time it's been exhausted. And you have exhaustion, which shows you exactly how many times a level needs to be touched before it can be broken, right? So that, and you see it right here. This would have been another start of a downtrend, because this would have been the start of a downtrend here, which would have gotten first touched here. So this actually, this is actually the start of the downtrend here. And just like this level here, if we broke this down into the 12-hour chart, this would have been 4 or 5 candles straight down. So this would have been the start of a downtrend here, and this has already been tested. So in this move, what I would expect to happen is we would need to break this level here, and then we'd come up and we'd test and reject that level there before we could, maybe come down and cup up and test this level and reject before we could come down. And that's how you guys can go through any chart and you'll see that as clear as day, how it tests downtrends. And this one, it doesn't need to test because it's already tested, right? So it's not going to come up, do this, it's not going to come up, do this, do this, do this, to this, to this, to this, right? This is already a tested level. So it's pretty important to spot out and change your levels and mark it. And this is already exhausted, right? So, and then this would be, this actually wouldn't even be relevant anymore, and this starts over again right here, or wherever we decide in there, right? So you can see how moves evolve and scale and change, and the events that change these things. And that would have been the swing low, but then the start of the uptrend would have been something like that. So actually that would be the level to hold in order for us to test the swing low, and this would be the level to break on this downtrend in order to break. And there would be another one right there. So that's another thing I should actually identify as the one right here. So to complete this chart properly, that's what it would be. And this was already a tested level, which I deleted, but that would be a dotted line, and so forth, right? And then all for the grander journey to get up here, right? So, and to break this level because it's already been tested back to here. So this is why understanding, the exhaustion of a level, and oh, my camera got fuzzy there. There we go. I have to kind of move my face in to get it to refocus. So that is kind of the, you know, the bigger picture and the relationship between exhaustion and level strength relativity, and the psychology behind exhaustion, and why I call it exhaustion and level strength relativity, and basically how it happens and how it works. And you know, the takeaway is that every time a level is touched, it gets weaker, and you guys can see that on the chart. It doesn't get stronger. There's a misconception there, and I'm gonna show you guys another chart to show you where the misconception happens. What's been a popular coin? Well, what is it? AST has been popular. There's been AST. There's been metal. There, Theta's been a popular one. That one took a huge move up. Let's see Theta, or maybe let's not see Theta. Let's go ADX, is that one? ADX Bitcoin, was this, am I wrong here? Yeah, I must be wrong. I thought this took a big move up. Maybe it did. Oh yeah, it did. So there's something else that happens in markets. So ADX has been you know, pretty heated lately, and we talk about how a level gets exhausted. There's the hidden part of level exhaustion that people don't quite see. And this is where people for an eternity have gotten confused. There's a difference between holding a level, okay, which is kind of probably where this stemmed from. The idea that a level gets stronger the more times it's touched this is probably where this stems from. I don't know for sure, but if I had to guess based on my experience and knowledges, I would guess this is where it comes from. So there's a difference between testing a level and exhaustion versus holding a level. So what does testing a level look like? Okay, you have, and we'll just use whatever's going on right now. You have a downtrend here, right? And you know, I don't know. I'm just charting the stuff on the fly. So you know, just completely charting it on the fly. And you have the downtrend would have started here somewhere. You know, if you break this down into a 15-minute chart, and let's do it for this one because this is a fresh chart, and this kind of okay, so I'm gonna actually have to go into 5-minute chart maybe. No, I never recommend charting on the 5-minute time zones, but just to further this point, I'd have to go into the 1-minute. Jesus H, we're just gonna mark it. It's fine, it doesn't matter. We'll go back to the 15-minute. So, you know, going back to this idea of, okay, let's start talking about the start of a downtrend versus testing a level, or sorry, the start of trends versus testing a level versus holding a level, versus where kind of this misconception lies. So in this chart, we would have known we needed to do two things. We would have needed to test two trends, right? And that would have been this downtrend here, and there would have been another downtrend here that needed to be tested, and another one right here that needed to be tested. So if we take this move and we start looking at these downtrends, when this downtrend closes, it can test this downtrend, and when this downtrend closes, it can test this one, and so forth, right? And then it can test this one, and so forth. Okay, so we know how we got the move there, right? We have downtrends that started, and you know, if we want to just be I don't know if this is actually the start of a downtrend. It didn't look like it from what I could tell. So fractally, I broke it down, and even to the 5-minute candle, it didn't look like the start of a downtrend. It just looked like a ramp up. And what caused this ramp up, actually? It would have been the breaking of other downtrends, right? I'm kind of getting off a little bit of the beaten path here, but I kind of really just want to, you know, drive this into your guys' head. And there's the start of another downtrend here. So this is the start of a downtrend here, which is actually the top of that trend, which is fine. So we can just take this level out because we're just going to mark it there anyways. Actually, no, you know what? Let's do this proper. So we have a downtrend that starts here, and I'm not going to go further back because I could just keep going, and you just keep finding a downtrend that starts here and blah, 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 right? And that's your guys' job to do. So you have a downtrend that starts here and a downtrend that starts here, right? And this gets wicked through. So this is an untested level for the future, or sorry, a tested level for the future already. And then you have another downtrend that gets here. This is tested, so we know when we come above it, we're likely going to break. This then becomes tested right here. So now we know this is going to break, right? So we come up. We already know that, you know, just like magic, you know, this comes up. That magnet tool. You know, always going to get the best of me, magnet tool. I don't know why I'm looking to the camera like it's your guys' fault, but, you know, whatever. magnet tools out there watching somewhere. So we already know this is a tested level, and so is this. So it's going to break and it's going to test this level and reject. It's exactly what it does, right? The whole concept of exhaustion, right? This is an untested level. So this needs to test first, and then it's going to, you know, move down because it's a tested level. It's going to reject that first time. So I hope this is, before we move forward, this is starting to really drive home that idea to you guys that tested levels, exhaustion, this stuff is real. And this is where I started to figure it out and understand it in my journey, and saying like, holy crap, this stuff is real. Like this is actually the science of trading, right? And we have a tested level there, or sorry, we have a new downtrend there that starts, and then we have a new downtrend there that starts, and one there. So what happens here? So then we come to this level here, and this is an untested level. So we know we have to break that first. So what happened on the 15-minute here? Where is it? And we weren't able to see this on the hourly level, but this, is that it? No, it must be back further. Oh, it's right here. Okay, here it is. So this level right here, where's our marker tool? So this level here comes up, it closes. Because it closes this level, we know that we can break an untested level. And this was probably signal for a lot of people to buy, as to say this was clear entry, because you've got untested levels up top that are even higher that are going to break, and you can make some kind of new high level. So then this becomes a rejection, 2 rejection points here. So it actually wicks both of them and rejects. And notice how it doesn't actually come up and wick this one and reject, or this one and reject into this zone here, right? It actually wicks both and does the exact same thing that I say it's going to do. It's going to come, and this level is now tested and broken, which started the move up to hit this untested level. So think about that for a second. This level has been untested, so you know you can touch another untested level. So when you break this move, you're going to have a bigger move up. It's not going to be this small little thing where you break this and test the next untested level. It's going to be a stronger move, because level strength relativity is dictating that we have a stronger move happening here. So if a stronger move is happening, the move up is going to be harder, right? So look what happens. It tests both those levels, rejects back into here. This at this point now becomes a tested level, and this is a tested level, right? And this is a tested level. And there's a whole point to going through this. 1, to show you guys how the move evolved, and 2, to show you how a level is held and the difference between, and where that misconception of a level becoming not held comes from. Okay, so now that's how we got here in this move. Okay, that's how we got here, right? Now let's change it back to the hourly chart. And this is how we got here, right? And let's clear the chart here, because we know everything to this level here is, we've explained how the move up happened, right? Testing, you know, exhaustion and level strength relativity, and you guys can see it clear as day, right? Now we're going to do something else, and this is where we're going to start to identify where the difference between wicking a level, like what we saw there, wicking and breaking through a level, versus holding a level, because it's the holding of a level that gives people that misconception of, I'm holding a level, or sorry, not that I'm holding a level, but oh, look at how many times this level has been touched. It must be making it stronger. And I think personally, that's where this concept came from, of the more times it got touched, the stronger it is, which is just ridiculous. It makes no sense. So we have, oh, we don't want that. We have this move here, right? We have, this is the start of the uptrend, right? And we're going to just do this. This is an untested level. And this is the start of an uptrend, right? Right here. We see the move comes up, it comes down, it starts its uptrend there. So this is the start of an uptrend, okay? Now, this is not wicking the level to break it. If it was doing that, it would be doing this. It would come here, and it would come there, and it would come there and break the level. Instead, what it's doing is it's tested the level. People are stopping this downward pressure. So this has become now the supply zone, and people are holding the level, okay? So this is being a level that's being held. That is not the same as something that does this, where it's a wick up, it comes down, it wicks up again, it comes down, it wicks up again, it comes down, it wicks up. Otherwise, it would do this. It would have buy pressure here to send the volume up. It would have distribution pressure, distribution pressure here, right? It would become a demand to sell zone. It would come down, have more buy pressure. It would come up and down, and one side or another would break for whatever reason that the events unfolded the way they did. This is very different. This is not a level 1, 2, 3, 4, 5, 6, 7, 8. Oh man, it held 8 times. It's been tested 8 times. It's so strong. This is a misconception, and you guys can see it. This is not this. This is not the swinging and attempt of a level. This is the start of a trend and the price holding, which is going to send the price up again. And in order for this price to move up, you have to test your downtrends, just like we always say. You have a downtrend here, you have a downtrend here, right? Come on, this is okay, my magnet's, that's why Mr. Magnet's not on. Fun. And it's still not on, even though I thought I clicked it. I'm going crazy. You start of a downtrend there, and then you have a downtrend right here start, right? So you can see that you need to test these downtrends in order for this move to hold, and it is holding the top of this trend right here. So this, like this being a downtrend, right? This being the downtrend, and I'm just going to drag it out. It's holding this downtrend. It's holding the start of this downtrend right now. When it starts to lose this, it'll probably test the start of this uptrend, which is right here, which is down to this level again, right? Or, you know, for whatever move, you'd have to break this down more. And there's an untested level here, and this is a downtrend. So, you know, now we do this thing where this is a tested level, this is a tested level, this is a gained level. Actually, we can just delete this because it's actually this level is no longer anything, just like this level is no longer anything, other than to say that it held this downtrend, and that's where price is being held up as by the start of this downtrend. But it's failing, right? Because this move is failing as it's going right now. Like, you'd have to test this now, right? This is the untested downtrend, and then you'd have to test this right here. This is an untested downtrend right here, right? After the move swing down, the move up, right? And this is the start of an uptrend, actually. So it's not even that you're holding this downtrend, you're now needing to hold this uptrend here. So you guys can see how level strength relativity plays an important part, right? So now you have that there. So there's a difference, and that's where I started to realize that, okay, understanding all these different pieces and kind of why it's such a complex theory to really grasp. And going back to the beginning of this video to say, you have to, you can call it whatever you want. You can call it the kitty cat deluxe. It doesn't matter. I love cats. I have 2 of them. They're great. And they're both Bengals, and they're both beautiful. So you call it whatever you want, but the underlying psychology is supply and demand. So you can, you know, use any one of these coin terms you want. They all have an underlying, none of them are correct, by the way. None of these that I have on the screen here are correct. Because they all miss one piece or another. Some of them have some truths to them, some of them have a lot of wrongs in them, but they all share the same kind of idea of why does a level get touched and broken and those things. And it's exhaustion and level strength relativity. So going back again to the beginning of this video, it's a hard concept to understand because it's very deep in theory. And not only is it deep in theory, but it takes a ton of practice to see this stuff out. Not only do you have to have an extremely great adaptation or an aptitude of, not an adaptation, it's not an adaptation of fractals. You have to have a great aptitude of fractal knowledge and how to use fractal knowledge. Then you have to compound that knowledge of fractal knowledge with exhaustion and level strength relativity. Or I guess that's not true. You would take fractal knowledge and compound that with the idea of how to create levels of support and resistance properly with trends in mind, and then you'd use that to identify exhaustion and level strength relativity. So understanding the theory of this stuff is very complex and very deep in thought, and there's a reason why it happens that way. And that's how you start to use it and apply it to fractal natures and fractal fractal information, and you know, you have to take this idea of exhaustion and level strength relativity, and going back to your chart, it has an ever adapting chart, and from all the lines of support and resistance that we had drawn on this chart, look at how many I have now. This is it. I have one here that I know this is already tested. So if I start to close out this downtrend here, so if I start to come above this downtrend and close out this downtrend here, I know I can move up here, and I would be testing the next downtrend, which is right here somewhere, right? Oh, that's kind of cool how that lined up. Oh, it was like perfect. Holy crap, that was good. It's like a hole-in-one or something. It just happened, magic, right? So right, and this is the little amount of lines I have, because going back again into this video, recapping something else we spoke about, is that this is something that evolves. You're not gonna have, you know, levels here and here and here and here and here and all over your chart, right? You're not gonna have this and this and this, and then it just becomes, well, of course it's going to touch, and then it becomes a fib tool, right? It's fibbing to you. It's the fib tool. It's lying to you. It's just going to become, well, of course it's going to touch one level. It's the, God, you've got 100 of them in there, and one of them would have been this right here, which would have been what it respected here. It came back down and it tested the top of this trend and created a new one. So of course it's going to have one level be right in there because you've marked out every single level on the chart. So, but that's not proper charting. That doesn't allow you to see things. There's less is more in charting. Events create new levels of support and resistance. Identifying those with all these advanced things we talked about is not an easy thing. But that's what it becomes. It becomes events that happen that have to then collapse into more events, right? And you know, you break it down fractally, and you look, and this is in a downtrend right now, right? And it has to gain this level here has to be gained, which was probably the test of this right here. So actually, you know, fractal to the 15-minute, this is a start of a downtrend right here, right? Or maybe there is no clear identification of start of a downtrend, so I guess you could say it closed out this low or this high of this, you know, downtrend that was an hourly right here. So if we were to switch this back to the hourly, is that a downtrend? No, it's actually right here. So and it's not right there. It's actually up here. So, you know, fractal information, right? You have to look deeper into charts to find more relevant information. And what's clear is there's one right here, right? So it has to test this. So right now that's where it is, and that's what it's doing. I'm not going to go deeper into the move and into what it's going to do next, because this video is on exhaustion and level strength relativity. But the point of going into this ADX chart was to show you that there's a difference between holding a level, which is not testing it 8 times and making it some super strong level, as opposed to testing a level, right? Coming up and testing it once, making an attempt to break it and coming up, right? Like what we had over here that was based on information from the past. So let's go back to our sheet and see if there's anything we missed here. A touch versus a wick. I guess we can elaborate that on a little more, and the depth of exhaustion, level, and trends. Example, we already went through example, so we kind of skipped to here. So let's just briefly talk about a touch versus a wick. We did talk about a touch versus a, what did we chart? Litecoin, LTC, was it Binance? I hope so. God, I don't want to have to do the searching for charts. It was, okay, good. Oh, that's nice and easy for me. And don't mind the colors that I use in these charts today. I just use red as a default color. We'll redefine colors and things that we do. And now you know that dotted lines are a tested level. And we will redefine that further in the future to have a more cohesive chart, just like we did in the past for the beginner series. But really, again, this is talking about something different. So, you know, how relevant that color of those are for now is not important. So a touch versus a wick, of course, you know, just going back to this thing, although we did talk about it, we didn't, I guess, identify it properly. So as a level is exhausting, as something is becoming, magnet tool, of course. Yeah, one last time. Good enough. So, you know, we talk about this thing as exhaustion is happening. You'll see the breakdown of exhaustion in the form of a wick, right? Just like you see the breakdown of exhaustion. And this is a good example here on the upside. You have a downtrend that starts here, right? So you take this and let's just break this move down, and we're just going to steal these guys here. You have 80% here, you have 60% on this touch, you have 40% here on this downside, created that that new wick through, just like 40% over on this side actually rejects, and then we have a 20%, just like this creates a wick through. So that's kind of the indication of exhaustion, and that's when a level is going to break, is when there's not enough buying to support the level, right? If you have a level that's touched and completely rejected like this, if this is touched and completely rejected like that, where it just comes up, touches it, and then bounces off, it just kisses the level, as one of those famous not so accurate books discuss. If it does that, you know that there's enough depression that happens here, or enough distribution that is supporting the strength of this level. So it still has level strength relativity, 60% relative to 80%. This was its strongest point. This becomes its next strongest point. This becomes its next strongest point, which starting to become a weak point, and then it breaks through and it wicks through. So the wicking of a level, you can see it on both sides here. You have 80, 60, 40 wick, 80, 60, 40, move sets up. It doesn't touch this down, so it just actually comes and wicks up through. So you can see how exhaustion and wicking of candles, it shows it in the chart. And then you have 20% here, and look at the next time this level is touched. It didn't. You see, and that's where another thing where the misconception happens. People think that, oh, look, we just made a new high, right? Look at this. We have a level here. Let's delete all the other levels. This is another part where that misconception comes into place because people don't have an understanding of the psychology behind it, right? Let's just delete all these. A classic thing I've seen on whatever live streams on Twitch or, you know, video tutorials or oh, we've just made a higher high, we must be moving up. Well, we made a higher high here, but the move failed. So what does that mean? That means that we're going to come down and we're going to wick through here too, right? Because it's level strength relativity. It's, or in books I've read, you know, the same thing. I constantly in the industry, I've seen this idea of, we just made a higher high, we must be in an uptrend. It doesn't work like that. You have to hold uptrend. So in this here, you would have had to hold the start of this uptrend. When you lose the start of this uptrend here, right? What are you going to do? You're going to test the start of your next, either the top of another trend, or you're going to do something like that. And look at just like magic, it holds, right? Look, you have, this is breaking down its strength, right? One touch, two touch, right? This level isn't holding. Unlike ADX, what we just saw where we had the level touch and hold straight through before it took a move up. This is not holding. This is testing. It's testing again there. It comes and it tests again there. It's not holding a level. So that's where that misconception comes into play, because a lot of people would tell you, we just made a newer high, we must be up. Well, that's a good start. That's the start of the move, but what's happening after that? That is the event that happened. So we have to now hold the uptrend. So we have to hold the start of this uptrend, just like we talked about in previous videos, right? And this goes back to events. We have to hold this. If we don't hold this level, we are going to test the next trend, right? So, and that's the thing. This is not the start of reversal. This was this level being exhausted, and then the move failed to hold because it just wasn't there for other reasons we won't get into in this video as to why this, you know, failed to hold, but it failed to hold. And then it failed. Yes, it made a new up, right? Because this level of resistance was exhausted. So it's going to make a new up. But then again, we still need to hold the start of its uptrend in order to become, you know, we have to do this thing here where we hold the start and we come up and we test the next level. And when we lose this level, we just go and we test down the next trend. And it's already so that trend is already so exhausted that it's just the collapse of trend, and it's just the collapse of the move. And now it's completely lost the move, and it's made a new, you know, series of swing low trends. And, you know, from there to here, et cetera, et cetera, et cetera, right? So that is how a wick, you know, can be identified in these things, and what does a wick really mean? So you know, reading all these books, and you know, my favorite one was always Japanese Candlesticks. That's one of the first books I read, and you know, did a great job of making me understand what these candles meant. But nowhere did I ever learn how to dissect wicks like this, other than on my own volition to reverse engineer all this market data and to say, okay, what's really happening here? What's the event that led to the event? So I'm hoping you guys follow this, because it's just one of those things that, one of the many things that I learned, and it was just reverse engineering. So for the last time, going back to the very beginning of the video, how do I describe it? I describe it as, you call it whatever you want, but this is the reason why I call it exhaustion and level strength relativity, because that's the way that it makes sense. So, and there's one more on the list. Levels and trends. Okay, so just you know, something to keep in mind for the next video, because we're going to get into this in the next video. Levels and trends. What we looked at today was the exhaustion of levels. Trends also have exhaustion. So when you have something like this, and we are just going to go into this very, very, very briefly. I'm going to clear this chart, and I'm going to draw one line. Whoa, that's not right at all. Magnet tool, down, start of a downtrend to the next swing high. This also has level strength relativity. How many times can a trend level? Because a trend is a level too, right? A trend or a wedge, right? A wedge pattern like this, right? You have, where would one be? Right here, right? You have a wedge here. This is the same thing where you have exhaustion on a wedge on both sides, right? That's the same thing. And then you know, you have an evolving wedge here that would be like something like this, and you know, you go from this swing low to this swing low to where would that say? Well, it would be right there. I mean, that's more of a valley now, but the bottom side of this has relative strength to an exhaustion. And this is why, if you actually rewind back to the video on wedges, I don't remember which video it was, maybe it was number 4. This is the exact reason why you have the same thing happen, where you see, and I talk about, if a move breaks through sideways, it's going to move down because it has then therefore lost this level, right? Like that, it has lost this, which is a level, right? It's the same thing, and that's why it happens. So going back to the beginner's lessons, when you have this thing that it constantly touches, it comes to a point where all that price has to do is hold that, and it's exhausted its ability to hold that wedge or that trend or that you know, whatever kind of wedge it is or whatever you want to call it, right? It's the ideology behind it. So we will get into that in the next video. And the example, we did that the whole video. So that's it for this one, guys. I hope this was a good eye-opening lesson for you. It's extremely important. Just like all the advanced material, it becomes monumentally as important as the last video. This advanced training never slows down, and it is very, very theoretical, and it is very very deep psychologically. Lessons like this are very, very much an understanding. We learned how to use the tools in the past, and this is how we make sense of them so we can make decisions in the future, right? It becomes a two-tier system, or not a system, but it becomes needing one in order to make the other make sense, or you know, the peanut butter to the bread, or whatever. It becomes one needs the other one. You can draw levels, but if you don't understand what's happening with those levels in the moment, you don't know how to trade the trade. You can't see where the breakdown is happening. You can't see where it's about to rise up, and you're about to hold, you're holding trend, and all of a sudden, boom, your price moves up. Well, why? There's a reason why, right? So this is very psychological, and I hope you guys understood it. It was a tough one to describe and explain, probably one of the toughest ones to communicate, just because I had to touch on some pretty sensitive things, like why, you know, some of these famous theories were wrong, and why, you know, there's a miscommunication in the industry, and you know, how I see things. Yeah, okay. Well, anyways, that's it for this one, guys. Take care, and we'll see you on the next one. Bye.